Hi everyone and welcome to today's morning report on Thursday the 25th of June with me, Rich Perry, market analyst at Handtech Markets. The European trading session, a bit mixed actually so far. It started off pretty weak actually. The Wall Street markets were lower overnight and then subsequently the Asian markets also. DAX was quite sharply down. But it's rebounded actually and is now currently trading slightly higher. FTSE continues to be sort of the playing second fiddle to the DAX's move. All the FTSE moves are relatively sort of softened by the fact that it's not really as volatile as the DAX, and certainly at the moment FTSE is only slightly lower. But it's very interesting that we've seen this move today, even though we've seen apparently in the over the last day the negotiations over Greece continue to sort of not go anywhere really. They obviously the initial euphoria of Monday has sort of begun to fizzle out slightly, and there was a slight correction yesterday. And that sort of dragged Wall Street lower, but at the moment it's interesting because the markets are basically cautious today. We've got a couple of days worth of EU summit, the leaders meeting in the EU, and they're obviously trying to come up with a solution for this process, but as yet nothing yet concrete. Rhetoric's not great. Syriza officials are using words like the fact that the creditors are annihilating and blackmailing Greece. So it's still not all that great, but certainly at the moment there is still prospect of a deal, but it is very slow coming in the market, so just taking a bit of a cautious stance at the moment on the back of that. Now, forex trading not really moving on the back of these on the back of it, but what we have got is the Bund yields had been dropping away, which sort of started to see that the sentiment was turning back towards safe havens again, interestingly, but just slightly higher again, turning around in a little bit intraday, and that is reflecting this improvement that we've seen in the last few minutes. In terms of forex trading, just basically flat really. It sort of settled after that sharp rally on the dollar on Tuesday, which saw some of these forex markets turning around, but consolidation really, and that's pretty much across the majors, apart from arguably Australia, which is or the Aussie, which has had a bit of a bounce today. You've had the Senate looking to pass that sort of legislation that's going to help the TPP, Trans-Pacific Partnership for the states. That would obviously help Aussie trade, and also the news that China was going to be getting rid of the loan to value ratio, which would help to drive small business lending as well. So that would also help the Aussie. But other than that, pretty much cautious across the board. We've got the US personal consumption in expenditure today. Now this is interesting because this is the Fed's preferred measure of inflation, and the personal consumption expenditure is forecast to stay around about 1.2%. Now if that starts to rise to 1.3%, then that would, the market would take that as an indication that that is a strong improvement in inflation, and improvement in inflation pushes the Fed ever closer towards hiking rates. So that would be dollar positive. Now we've also got the jobless claims at 130 as well. 272,000 is the expectation there. So no real change on last week, but markets will certainly be focusing on the PCE data at 130. So that takes me to my chart today, which is the Aussie, and the Aussie dollar has sort of consolidated really. It continues to fail up around that 78 figure level, not really going anywhere really, and you're sort of seeing a much tighter range developing. And what I've found interesting with the Aussie is that it continues having found support around sort of the 50 area on the RSI through that run higher in April and May. It's now using that as the basis of resistance, so that is sort of where we're seeing a sideways market in the Aussie. No real selling pressure coming through yet though, but still it is below that 78 figure level. But here we go on the intraday chart, and this is where we've seen sort of a basis of support forming around the 76.80 level, which is just having been the sort of low in the last few days. Actually continues to find support around that low, and last couple of days actually we've seen that 76.80 level coming in and providing support. So you're seeing that move, and whilst you're seeing that, you're also seeing a bit of a corrective outlook, slightly corrective outlook, I'd say slightly corrective on the MACD and RSIs on the hourly chart. RSI falling over around 60, again overnight falling over around 60, and pushing back towards 30. So that gives you a slightly more of a bearish bias, and the fact that you're seeing these sort of lower highs that come in, latest one around that 77 big figure level. Oh, sorry, 7770 level. And the fact that we're seeing these lower highs would suggest that perhaps you're seeing another one in place overnight around that 7740 level. So it'll be interesting to see if the Aussie does sort of continue to tail off, because it was stronger than this in reaction in Asian markets, but then as the Europeans have taken over, it slightly started to sort of fall away. You can see this sequence of bearish red candles, so the pressure is pulling on this chart, and we could see a move back below. There is a minor support around 7710, which is a bit of a pivot level, nothing too serious, but a bit of a pivot level which sort of protects that 7680 level. So it does seem as though this rally that we've had in the Aussie today has just lost a bit of impetus and is rolling away again, so we could see that just falling back lower again. But at the moment, to be honest, the Aussie is fairly range bound, and it isn't really going a great deal, and markets, I think, generally are just looking out for this Greek resolution, really, and whether when we get it or not, I think we then see a bit more direction, but until that happens, I don't see too much direction happening. So I wish you good luck in your trading on the Aussie today, and I'll speak to you later, I think.